Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for an interesting day on this Thursday, the 11th of April, 2024. Just getting on just after 6:10 p.m. Central Time. So this morning we had the PPI. I reviewed it, I think, in detail this morning. I looked at it as a number that's certainly not a hot number. It was the other side of the CPI. It's not a super number that's saying the economy is slip-sliding away, but it's in the right direction. It was not as hot as the trade was expecting it to be. It came in cooler, and that's a good sign. But remember, it doesn't include a lot of the things that have caused the inflation that CPI takes into account, shelter costs being one of those. It's interesting because I just heard and read a story that in Manhattan, rent prices have slipped a little bit. Well, it's Manhattan. I mean, you're talking for a one-bedroom apartment, $4,000. So, and by the way, it's a very small one-bedroom apartment. I have friends there that have lived in studios that they're $2,500, $3,000. I don't know if they're 500 feet. And it's true. And you go there. I mean, they're weekend places that they'll go, but because everybody's out in New York. In New York, you're out all the time. You have dinner. Nobody eats home. Everybody's out. So it's interesting that you're getting some of that. I wrote in my morning subscriber video, if you get my full research, that I thought the market was primed to get a bounce off the lower Bollinger Bands in a number of markets, specifically the stock indices. And it happened. The second thing I wrote in the commentary that I put out today, I think the commentary went out just before noon, and I said, if you're dying to get into the gold and silver, you just got to buy them. Come out if you lose the bullish embedded reading on the daily chart and forget the weekly, if that's your method that you want to go with. All right, and I'm sure it was, as it turns out, it was pretty darn good advice because the market has taken off since that time frame. That doesn't mean it'll hold up, but I happen to think you're going to the 30 level here. I've mentioned that to you as a longer term objective, and maybe 27,000 in the gold. People look at me like I'm crazy when I say that, but I don't see inflation going away anytime soon. I think that the Fed's willing to live with it. I don't think the Fed can get to 2% target on its inflation goal anytime soon. Now, could it eventually happen? Yes. But if you're saying, do I think it's going to happen within a year from right now? No. I think it's too baked in. I think you have too many people getting jobs. I think those people that are getting jobs have money to spend. As they have money to spend, they're buying goods. As they're buying goods, as they're renting apartments, as they're doing blah, 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 you're not going to break the back of inflation with that. Does that mean inflation prices have to go up? Well, it depends. I mean, you're watching what happens. Can you imagine if the hurricane season, just to bring this up, hits Florida again in a terrible way? We're already seeing the tornadoes that are hitting Texas and Louisiana and things of that nature. But if you get those and they hit, how do you get insurance in some of those areas? You know, I'm curious because my own brother-in-law is building on the west coast of Florida a really nice home. And it's all hurricane-proof. So I'm curious to see how that comes about for insurance. Now, thank God he's not on the beach. He's inland. We had all talked about that. I said, you don't need that aggravation. Go inland a bit, and a bit. I mean, he's 10 minutes away from the ocean. It's not a big deal. But get enough away and get a higher piece of land and make sure that what you have is hurricane proof. I had lived there for a while. I lived on the East Coast, but it's just the way of life there. And we'll see what all happens. But you got that. You got car insurance. Car repairs up 11%, all right? There's computers and everything. In the old days, you take it in, they clean out your carburetor, they clean out the points, and you put them back in and the car runs. That's not how it works anymore today. And you got to pay attention to all that. So when we look at the S&P for the week, we got one more day to finish up. We're down 0.14%, just over a tenth. Okay, it's been a big fight. For the moment, today, we're up 2.75 points, which is just about flat on the day, not really doing much. You can see where the market bounced from. Yesterday's break, then we just took it out by a little bit and turned. The battleground's the 18-day average. That's what I wouldn't be surprised if you hit, and that's where the battleground's going to be right now. And the support came in at those lower bands. You've got to learn these bands, both the upside and the downside. People don't. And I know you'll get a market like a gold that will sit on the band and go away. And you'll pick an example to tell me, boy, that doesn't work, that doesn't work. Are you wrong? It's all about the high percentage. It's not about the one exception. And nobody that I know teaches to go short at the upper band or long at the Bollinger Band. They do teach to liquidate longs up here. They do teach to liquidate shorts. You may find somebody that's got another technique. I don't know it, and I don't know what the results of it have been. When I take a look at where you're at here, I see a market that has now had the wave of the disappointment that they're not going to get interest rate cuts in June. I don't believe it's going to be July either. I'll stick my neck out and say that. I know there's just as many people now saying from June that it's July. I saw it today all day on CNBC. And the diehards always go, no, there's still going to be 3 of them. Okay, that means they need the CPI to collapse. Show me where it's collapsing in food prices. I go to the grocery store like you do. I'm not seeing that. Show me that auto insurance, which was just up 22% for the year, is going to start collapsing. Show me that your rents, your shelter costs are coming down. They're going to collapse right now. How do they get to the June numbers? What I'm trying to understand. I could be wrong, but I don't see it. In the NASDAQ, again, 2 days of fighting at the Bollinger Band, and you popped right back to the 18-day average. The micro mini's the weakest. I said that with you yesterday. It's still bouncing away, but it's the weakest, but not so with the Russell, which went down today not only to the Bollinger Band, but to the 100-day average and said, I see you, I see you. And the market yesterday, today from there, getting its bounce away, but it still has resistance. All of the markets still have resistance at the 18-day average of closes. If they can get over this week's high, they negate the downtrends. I don't see one that's in a position to start a bullish trend. When we look at the 10-year notes, now you're latching on to, and you got to be very careful when this happens, the Bollinger Band. That's that gorilla glue trade. And when it does that, is it going to force this to embed and continue the market down? That's what you got to look at. And if you get interest rates that keep going higher and higher, it's very difficult to get bullish the stock market here. Yet, the market doesn't need the Fed to cut, because the economy is so strong. Isn't that what we heard 10 days ago? I believe that's what it is, and I still see that type of strength. And in the 5-year, it's the same thing. So I can see the arguments that maybe we're going to get down too cheap and we're not embedded yet, but I don't see anything that's bullish with these. In the dollar index, look, you're up to the upper band. And just like you were down in the stock indices to the bottom, and I look for the market to turn away from there, just because you're to the upper band doesn't mean I'm not looking for that to occur too. You negated the downtrend. You got your big spring. A lot of stops probably got hit, and the market said, let me rethink everything. And in the euro, what a difference a day makes. And look at this, higher high, lower low. So now, as I thought, and as we mentioned here, Miss Lagarde came up, and what did she do? She set the market up for a June cut without a promise. And don't you dare put that word in her mouth, because she made it very clear. No promise of a June cut. The data will tell her what to do. And she made it ultra clear. What the Fed does, they look at it, but it doesn't drive what the European Union does. It can't. They have a whole different set of fundamentals that work there. Their economies are very different than America. And that's what she said. And she's right. But she set us up that this is probably a near-term top for a long time, unless some fundamental changes that you and I don't know about right now. And that may well be the case in the British pound. Remember what I said? The race to the bottom is going to begin. And the market is starting to say, today was it. They're joining the Swiss National Bank. It's just a matter of the data staying weak. If the data stays weak, then the pressure is building within the committees. Let's go for a cut and see what happens. That's what they're saying. In Bitcoin, the market held the 18-day average. It's still very much a sideways market, caught in here, just drifting, but give the market the benefit of the bullish bias unless and until 67,750 is taken out. In Brent versus WTI, well, now you got to figure out how do you position yourself for the weekend. I mean, the world thinks something's going to happen with Iran and or probably its proxies attacking Israel in some manner. I don't get the impression from the rhetoric that's coming out of Oman as we're hearing different things going on that the Straits of Hormuz are going to be in any manner shut down. I get this is all about Israel and the proxies. That's at least what I'm hearing at this point in time. We will see. A lot of pressure on Israel to open up more of the ports. They're doing it. Obviously, the taking out of the of one of the leaders of Hamas's sons and grandchildren didn't help the negotiation. But he said, and he being the Hamas leader said, no, he wants to go ahead. Of course, he would say those words to be such a gentleman. Where are the Israeli hostages? They can't come up with 40 hostages? Are they all dead? Where are they? You took them. Where are they? Okay, you're not going to get peace that way, and you're not going to get Israel out of there. They're not going away. They're not going to say, all troops, come on back, we'll go to this line. Isn't going to happen. If Hamas leaves, it all happens. It's that simple. Then we get the Brent versus the WTI. Still in an uptrend, but overbought. I think you see that. It's not embedded any longer. Same thing in WTI. So in terms of momentum, the market is saying, in terms of momentum, before you go through these highs, barring a war event, I guess, the odds still favor on a normal market. You'd be drifting towards the 18-day average. In gasoline, a massive long position is building all over the world in gasoline. Read another report maybe 30 minutes ago on it out of London as to what traders are thinking. So, people are building in, like I said, we're going higher, they think, and we will see what goes on. Here's what I get nervous of in trades, and you always got to be this way. When everybody's one way, number one, they can't be. Why? This is not the stock market. This is the futures market. To buy a futures contract, somebody has to sell one to create a long position. So just think of what I just said. So for every long, there's a short. And if open interest is building, there are people that are saying to you, whether they're hedgers or whatever, no, I want the short side of the market too. And when you get that way and the technicals start questioning themselves, I don't know, I back on the market and just go, okay, maybe we take another look. I thought we would peak out in natural gas, said so in my Spider ETF too, and you did it right where we thought, the upper band. But look, I don't think there's a big amount of downside in this market. I think that the market is carving a sideways action. Could it break out to the downside? It could. If it did, this all becomes a top. All right. But right now, the odds favor it's going to find support in the 172 area on this break, if it can get down there. And that's where the trade's going to take a fresh look at things. And how I'm looking at the market, difficult, because as we produce more and more crude, we're going to have more and more natural gas. And there's pressure on the Biden administration with this nonsense of, we want to study it, so we're not going to issue more permits. Oh, please. Take a look at the swing line, the slow stochastics, Bollinger Bands, window envelopes. I did all new chapters for the course. So I didn't include old chapters and redid this. I gave this market completely new look, way about it. Bring in a lot of things I haven't done. So there's 45 videos. It's hours of videos teaching you how to do swing lines. And the way I teach is pretty, I think, interesting. I'll start you off with PowerPoint so you can get graphs and you see what they're doing. Then we bring in the actual chart. So a graph will look like this, and that's what a PowerPoint would look like behind me. But then we take you into the moving averages, and I explain the different types. The slow stochastics, I go into some of the different types that are in there. Bollinger Bands, window envelopes, one of my favorite tools. And then you're going to learn how to plot everything on a chart. Now, I believe in colors. And some people don't like the black background. Use your own colors then. But I do this because when I look at a chart, I don't want to spend 20 minutes looking at a chart. I want the colors to be taught into my brain. I'm looking for certain things to develop. Everything is color coordinated. I look at the chart and boom, okay, that's interesting. Then I dive into it. But typically within 15 seconds, I can see, do I want to do anything or there's nothing to do on that particular chart. You get my charting software. We have two versions, this one and then one called QT. They both do basically the same things. Then you're going to be certain to get the examples. Now, how did I decide to put examples in this? By making sure you get a 30-day trial to all my research. Why? Because there's nothing better than a current example. Anybody can go out and cherry pick on a chart. Here's the perfect look to how this worked and that worked. I did that in my past courses. So I'll give you a couple of those and show you what they look like. But it's all about in the morning. We go through it and you're starting to go, your eyes widen. You go, wow, look at, he's talking the swing line. Now there's that window envelope. Now I get what he's saying and blah, blah. And you start building it, hopefully, into your own type of technique. And yes, this is done in a way that you can add things. You can get rid of slow stochastics, bring in MACD. You can get rid of MACD, bring in RSI. You decide what's best for you. I know what I like, and I teach what I like. And I give you examples of other things. And by the way, we do point you in the course to different sources that you can look at, so you get different ideas of different studies and so on. So it's iraepstein.com under the word education. You can move it up here. There's a 10% discount, the inaugural price, because it's brand new, and take advantage of it. And when you buy the course, that's not when the course starts. The course starts when you activate it. So you can buy it today and not activate it for 2 months, 3 months. You decide. But the discount of 10% is not permanent. That stays. Take advantage of it if you want that. And I think you'll like what you see with the course. The one thing I really believe in is teaching, and I think I can help you with that. I'm Ira. You have yourself a good evening. I'll see you in the morning.